Welcome to Trading Nation. I'm Brian Sullivan. Today we are joined by Tony Dwyer of Canaccord Genuity. All right, Tony, you went neutral on the overall market in December. Do you feel like you've left any money on the table?
Brian, I think if I went neutral market, neutral sector. So our message, and I've said this on the show before, I never, ever, 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 ever go really defensive sustainably when you're in a strong fundamental backdrop or a good fundamental backdrop like we are. So when I move, when I make a tactical move to the sidelines, it's basically saying if you have a lot of leverage, bring it down, and if you're overweight some of the offensive sectors, just neutralize them. And I think that was the right move. When you look at how once we had upgraded the market prior to the Trump election, I wish I was smart enough to know he was going to win. It had nothing to do with that. It had to do with the global economy was accelerating and not enough people were really paying attention to it. You ramped so hard after the election that you went too far too fast, especially in the quote-unquote Trump trade. So in mid-December, we downgraded it. Since then, the Trump trade, which is buy financials, industrials, materials, and energy, because that's where he's going to focus on infrastructure and regulatory reform, they have significantly underperformed the market. So I think if you're looking at the S&P, yeah, it's been the wrong call. It's higher than when I made that call. But from a sector positioning, I think it's been pretty right, and I'm ready to change it, actually.
Tell us how.
Well, when you downgrade the market, you're looking to get back in. You just need to work off some of the overbought conditions. There's two things that have happened over the course of the last few months. Number one, the Trump trade has been a total, it hasn't worked. It's just been wrong. Investors have been flooding out of it. That's one side of it from an intra-market for equities. The defensive macro indicators are also showing a very defensive posture. So if you're thinking of rotating defensively or becoming quote-unquote defensive, it's already happened. For example, when you look at our favorite technical indicator is a weekly stochastic on any index or market or stock. When you look at the weekly stochastic, gold is overbought, the VIX is overbought, believe it or not. And again, this is weekly stuff. So gold is overbought, the VIX is overbought, the yen is overbought, and of course, U.S. Treasury bond prices are overbought. So the investment community is already put on the defensive trade, so I'm looking to lean into any further weakness.
Do you see a 3% 10-year bond yield by the end of the year?
I think it's going to be somewhere between 2.5 to 2 3/4. I don't think it's going to stay here at 220.
Are you surprised by how low it is right now? I mean, it's been lower, I get that, but given the global reflation and the overall strength of stocks in the past 12 months, are you surprised we're 2.2 on the 10-year?
Yeah, I kind of expected that it was, I'm sounding like I know everything. I don't. It came down because you knew that once the Trump trade happened from the election day into mid-December, it was so dramatic and so many folks were calling for much higher yields that you kind of got too short. People got too short the bond market. I think a good portion of that is short covering now. And Brian, this is a really important point. I get the question all the time from investors, isn't the bond market telling you something? Yeah, it's telling me that it's pricing in too much weakness. Just like it at 260, it was telling me you were pricing in too much strength. So I think we have to be very careful to make short-term judgment on quote-unquote what the markets are telling you, because they can be wrong on a temporary basis.
Yeah, nobody's right all the time. The market is not right all the time. How much of this flood into treasuries you think is really just fear about what's happening in Europe? You know, the French elections. Yeah. Let's just hide out in U.S. treasuries and wait and see who wins the election.
And you can see that on the trading desk across the street. Nobody's really active right now because who wants to take a stand 2 days before the French election? I mean, that's a pretty tough ask. So I think there is a bit of hesitancy and hedging that's going into it. But again, I think people got too short the bond market. And, you know, once you get the rally, you get some shortcoming. Remember how levered people are when they're investing in the bond market, and some of that leverage is coming off.
Yeah. And I do want, and last question, you know, because I have people ask us, why are you guys focusing so much on the French election? The way I've told them, and tell me if this is the right analysis, I hope it is, what I've been telling people, is we're not really talking about the French election. We don't really care about the French election. We care about the future of Europe. And the French election is in some ways a proxy on the future of Europe as it exists now if Marine Le Pen wins. Fair or foul statement?
I think that's fair. And what I really want to focus on, and I think this is really the key to the whole commentary today. When you're in a backdrop where you have a positive yield curve, a still accommodative Fed policy, and a positive growth trajectory, things like Le Pen winning or Brexit or Trump winning. Those are all opportunities. Sometimes the market gives you, the market gods give you an opportunity to get into better prices. And I think that we're about to have one of those. Now, again, I've been, a little bit cautious looking for a correction, too early, but since mid-December. The market has already worked off a lot of those overbought conditions. And as I mentioned before, it's already had a sector rotation away from the Trump trade. And the macro folks have already put heavily on the defensive trade, given the overbought of the VIX, the yen, the bonds, and the gold market. Yeah. So I think we have to be careful to look at a geopolitical event and say, okay, now is the time to get out of it, because the macro guys have already kind of priced it in a large way.
Tony Dwyer, always great to get your insight and your views. Thanks very much, Tony. We'll see you again.
Thanks, Brian. Have a great day.
Take care. You too. Thank you. And thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.